Being part of a publicly traded company, you may receive restricted stock or restricted stock units. And the next question becomes, what do you do with those and how are they taxed? Let's tackle that on this episode of Office Hours. Hey everybody, Dominique Henderson here today, founder of DJH Capital Management, your YouTube CFP. Want to give you a quick rundown on how restricted stock and restricted stock units, we'll be using those terms interchangeably today. They're pretty much the same thing, but basically your company is going to give you these when they want to give you some comp, but not necessarily in the form of cash. They're going to give you in the form of stock. And what happens is after this is awarded to you, you can sell this stock and use the money to pay for different things. So let's break down how this will work from the beginning all the way to the end. The first thing you need to have is a brokerage account. A brokerage account is just going to be a place where you can keep these awards so that once the company awards them to you, they go right into the account at the broker so that you can trade them, sell them, all that kind of stuff. So usually your company is going to have a preferred provider, some wealth management firm that, has already got accounts set up with many of the employees there. And I would say it is to your advantage to use them. One, because of the relationship is already existing. So if you ever had questions and you can just give them a call, they'll probably know what you're talking about because they've done this many times over. The second is you're probably going to have an advantage to some type of advantage pricing when it comes to trading those stock units or those stock awards that accumulate in your account. There is anywhere from, let's call it $5, and some discount brokers are very, very cheap and they're, basically nothing like a Robin Hood, all the way up to $20-25 a share. $20-25 a trade to trade. So you want to, let's say you don't want to have a cost prohibitive relationship. So it could be better for you to be at that relationship developed through the firm, just so you'll be able to trade those when you want to, and it'll be pretty convenient for you. Now come the fun part, the taxes. The tax man cometh. The tax man always cometh, right? Once you get an award, you're typically going to have a 25% or so federal tax for income. Remember, just because you got stock awards, this is also counted to you as W-2 income. So on your W-2, let's say you make a base salary of $100,000 a year, and you get stock awards of $50,000. Combine those two together, it's like you made $150,000. That's the way the IRS looks at it. Therefore, that's the way that your employer will calculate everything. So they're going to withhold something. So let's use some round numbers. Let's say you got 1,000 shares awarded to you that are trading at a price of 100 during the date of the award. So that's 100K to you. The typical withholding rate, like I said, could be upwards of 25% federal withholding. So the way this would work is, let's just say you got an award of 1,000 shares, and on the award date, those shares were worth $100. So that $100,000 as an award to you, you won't get all $100,000 or 1,000 shares. At a 25% withholding rate, that's a $25,000 tax bill. And if you're using a method that's really common when you get these awards, which is the gross up method, which means that they're just going to reduce the amount of shares in your account by your tax bill. So in this case, $100,000, $25,000 of federal withholding leaves you with $75,000. And that would be divided by 100 would be 750 shares. So that's the way that would work. You would see not 1,000 shares, that would be your award, but what would be actually in your account sitting at the broker, that account that you just opened or had open already, is the 750 shares. Probably what you've been waiting for. Should you sell them or should you hold them? Like, what does it really benefit me to have these? So this is where you're going to have to use a little discretion based on your goals for wealth accumulation. If you hold them, you're going to likely, if the shares pay a dividend, you're going to collect the dividends. They're going to appreciate over time. You're going to gain wealth. But you want to be mindful of the fact that if you do sell, that selling within 12 months of your award date is going to trigger a short-term capital gain if the shares have moved in price. Let's say that the shares were awarded at $100 a share like we had, in our previous example, but they went to $110 a share. So this extra $10 of gain, if you sell those shares within a year of receiving them, you're going to pay short-term capital gains tax, which is going to be the same as your highest marginal rate in your federal tax. So you want to avoid that at all costs. That's how people get a really big tax bill, is by selling a little too early. If you wait just 1 year and 1 day, you'll get the more flexible, or let's say more lenient long-term capital gains rates that you would pay taxes on the gain on. So you want to be mindful of that. You probably want to talk to your tax professional or tax advisor or financial advisor when it comes to a strategy on how you dispose or sell any of these shares, or if you just decide to hold. That strategy is going to be up to what your financial goals are as far as wealth accumulation goes. What is the takeaway from this? Well, I think the takeaway is a couple of things. The first is this can be a very scary, complex subject at first glance. You know, you need to have a brokerage account. You're going to have taxes taken out, and then you need to make a decision. I recently sat down with a client about something on this nature, where they had publicly traded shares. They've been accumulating for quite some time, and they wanted to decide whether or not they should sell all, some, or none of what they had. And what we did is we ended up sitting down together and having a conversation about where their finances were going to go, what their goals were for the next couple of years, and really just framing up what I would call goal articulation. Because once you have a passion, or a purpose rather, behind what you're trying to make your money do, it becomes very easy, or at least easier, to make decisions of sudden wealth or wealth accumulation strategies. The other thing I would mention is you want to have some type of schedule in place, regardless of what your strategy is, simply because you don't want to accumulate a majority or the great majority of your net worth all in your company's stock. You know, you've got a lot of assets there already, including the fact that you get paycheck. You likely have your benefits through there. And so you're probably got your 401k there too. And so you want to be cognizant of the fact of diversifying your income and your net worth when it comes to accumulating these awards over time. Again, the key is going to be to sit down with somebody to articulate what your financial goals are, and seeing how this bucket of wealth is going to help you move closer to those goals that are most important to you and that will allow you to live the life that you want. Okay, my question to you: do you have any stock awards, any restricted stock awards, restricted stock units that you have questions about? You may be curious, don't know if you should sell or if you should hold. Drop me a line down below. I'll do my best to answer those questions. Don't forget to subscribe. We'd love to have you a part of this community. We'll talk to you later. Bye-bye.